Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The market is now stabilizing and clearing higher from the supports that have been running this market for so long. And just to clarify, the key congestions that are now supports below are and have been between 97.50 to 99.95, between 93.95 to 96.06, and between 91.83 to 91.86. We now have the possibility of a shallow bull channel from the mid-May to date move, currently 96.63 to 10.173, though this is by no means certain. Just an unhighlighted possibility right now. That is the immediate possible pattern, as prices are in reality smacking up into the high from earlier this year, up at 10.164. It was, as I said last week, and I quote, "Further up we have a fairly free area up to the March high at 10.164. This high is a function of the 2011 high that is just above at 10.190. So we can in effect regard them as one congestion area." End of quote. It will be supremely important what the market does at this congestion area. As to look beyond this area, I had to go back to my monthly charts, where I saw there a pattern which I have replicated here on my daily chart. It is highlighted in dark blue, and it is the middle sign of the big 2022 to 2023 bullish shift pitchfork, currently at 10.345. Now this bullish shift pitchfork has been broken a couple of times, but it has also seemingly repaired itself each time and looks like a reasonable potential topside halt. Not a stop, but a halt. Because otherwise we would have to look up at the April 22 high at 10.580 with all the implications such a high level has. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, all one within another, all happening at the same time, all affecting the market in their own way. And I thought for the last few weeks that the picture may be starting to get clearer, but instead it's becoming murky once more. Of all the features, by far the most consistent one has been and still is the bright red, shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. In March and April we moved below the bright red middle time, which is currently at 27.03, and down towards the bright red lower time below, currently at 23.94, where prices consolidated and started a fresh build-up, such that today we are once again challenging the bright red middle time, and from below. Looking further down, we have the support of the flatlining gold long moving average, which is now some distance underneath the market, and it's currently at 25.68. The gold long moving average is in a small congestion band between 25.63 to 25.81. Interestingly, the rising green short medium moving average, currently 26.13, which in the past really didn't look that great, has risen enough to start becoming an immediate support of its own, if not necessarily a very good one. More recently, prices have pushed up and stabilized over congestion at 26.50, as well as over the big old 50% Fibonacci line of the 2008 to 2022 move at 26.75. Now separate to these, we had a mid-April to mid-August dark blue bull channel, currently 26.94 to 29.07. It was not a great bull channel, but in its early days it was workmanlike. However, prices managed to punch down below the lower bull channel line, and it looked like the market was planning to establish itself underneath it. Yet last week we saw a big strong move higher, and today we see prices with two previous consecutive closes over the broken lower bull channel line. All this action left me last week to suggest, and I quote, "That just leaves us with a possible sideways move, a rectangle if you will, from about late June to date, with the core support around the gold long moving average below on a closing basis, and the as yet untested resistance above, that is at least since March, up around the 50% Fibonacci line at 26.75. End of quote. Well, today this leaves us with a possible break higher from this possible rectangle pattern. The rectangle being in between 25.68 to 26.75. Hence, a primary target X would be up in the 27.60 area, just over the 50% Fibonacci line November 2015 to March 22 move at 27.53, and with a harder to reach secondary target X1 up in the 27.82 area, up in some fairly free area overhead. This rectangle also opens the door to look at the whole action as a possible bullish halfway hesitation, with potential up to even the 28.80 area. But that is just a possibility, and I would like to see the market's actions as it moves higher, if that indeed is what it has in mind. LME 3-month led, a mid-April bull channel saw the market breach on the downside 8 weeks ago, then seemingly repaired, only to break lower 7 weeks ago. The lower trend line was originally seen by me as part of an ascending triangle pattern between May to June, but it developed into a mid-April to late July bump and run reversal top pattern, as well as part of the not finished bull channel. Going to the bump and run reversal pattern, as I said 7 weeks ago, and I quote, if this pattern decides to follow through on the downside, then we will have a primary target X down in the 1964 zone, just above the bright red extension to the August to December 2024 head and shoulders neckline, and a secondary harder to reach target X1 down at 1916. And that's coincident with the low of January this year. End of quote. The second concerted attempt lower in early August travelled further down than the one in mid-July and reached the bright red neckline currently at 1959. That's the August to December 2024 head and shoulders pattern. And in the course of process of tripping lower, the primary target X at 1964 was reached. But that was all, as prices have since then moved back up, hesitating around the various moving averages and importantly making lower highs, and also messing with the previously highlighted congestion between 2001 to 2003. That's the price, not the date. Looking further up, we have congestion between 2036 to 2039, including the January 21 high at 2039, and then at 2060, which was breached in the summer, but which eroded the bullishness enough that we formed a horn top back in early July. There's one further feature I'd like to discuss, and that is the exit pattern from that bump and run reversal pattern. It was made with a mid-July to late September dark blue descending wedge pattern, currently 1925 to 1949. I'd actually amend that to late August possibly, because that's where we are now. That's where the market broke higher from it. This pattern looked like it was becoming established, though it crucially did not have the 5+ touches of both sides necessary to call it fulfilled. However, I have chosen for now to still keep it in there, though with this and the way prices have strolled higher out of the top side of the pattern rather than punch through higher, I'm inclined today not to set up potential targets above, even though we had a really good try last week higher, which has not shown promise this week as yet. Indeed, the indecisive nature of the current market is shown up in the weekly key reversal down 2 weeks ago, followed by an immediate countering weekly key reversal up last week. And this week prices, well, they've been drifting lower again, all quite contrary and indecisive. Thus, it still seems as if the gold long moving average, currently at 1991, is acting as an attractor, though today it is looking like it might be acting as a base. Further below, we have the bright red neckline extension, currently at 1959 of the August to December 24 head and shoulders pattern, which together with the lesser Fibonacci line at 2021 that acted as a proxy for the high in August and last week, well, these two may be making a possible rectangle pattern, currently 1959 to 2021. It is early on this as yet, but I did note this idea last week, and I think right now it has still merit. Finally, there is one additional point, one additional point I would like to make, and is a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. At the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.